Hey folks, David Frost, MyStrategicForecast.com. What you're looking at here is a chart of American Express, and this is really part of the Lazy Gap Trader series that I'm doing. I put out a video on gap trading. I've got the Lazy Gap Trader manual. You can download that, MyStrategicForecast.com/gaps. And I just want to show you a couple of examples real quick for a minute on a couple of trades that happened this week. One yesterday, one the day before. The first one is Amex. Now we had a gap back here, but that's not what I'm looking at here. That's not what I'm talking. This one. It's not what I'm talking about. This one was this week, the other day, and what happened was we came into the 79.14. We had our order in, okay, and then basically we pierced through it, and the market went higher. And based on a strategy I show you in the Lazy Gap Trader manual, I'm still holding a portion of this, and I have zero risk on the table, and I've already put money in my pocket. And so there's a no-lose situation with American Express. And these gaps work out time and time again. Not every one of them, but such a high percentage that it really is a business. And you can make a living trading gaps if you know how to identify them, know where the proper gaps are, know why to take a gap trade and why not to take a gap trade. And these are all the things that I tell you in the Lazy Gap Trader video and manual. And so come on over to MyStrategicForecast.com/gaps and get your copy and get on the list. And I'll send you 2 weeks worth of gap trades every single day, and you can just watch them and see if we're right or wrong. Let's look at one more, which was this company here, TubeMogul, right? So yesterday, this is a little tiny gap trade, but yesterday afternoon, the price came right into this 1553, which is where this purple line is, which was the closing number of the 27th of May, right? So here we are on the 2nd of, down here on the 2nd of June. So just a few days later, the stock comes and retraces back into the gap. We come down and pierce through it by 1 penny, I think it was, or 2 pennies, 15.51. And then we went higher and we made a high of 15.70. So the point here is it's a 20-cent gainer. Okay, now on a $15.50 stock, that's pretty good. That's about what you would expect. Basically, anywhere from 15 to 20 cents would be a reasonable expectation. Took 17 cents on the trade, and that's not bad on a $15 stock. Some folks could have 2, 3, 4,000 shares, whatever you want. I wouldn't load up on it. It's a thinly traded stock, but at the same time, I'll take 17 cents all day long for an afternoon snooze fest of a market and a quick gainer in a gap trade. You put together 2, 3, 4 trades like this a day, and I'm telling you folks, this is a business. Come on over, MyStrategicForecast.com. However large or small the gap is, there's still money to be made. /gaps, MyStrategicForecast /gaps. Check me out. Check out the gap trades. I think you'll be pleasantly surprised on what they are. Thanks for tuning in, folks. David Frost, My Strategic Forecast.